Mixed messages. Markets get a boost from an Iran ceasefire and SpaceX, but are also getting nervous about hawkish central banks and possible forced selling. Regime change. Last week saw the first FOMC under new Fed Chair Kevin Warsh. We look at what went down and what Warsh's press conference tells us about the direction of the economy. And we'll have Matt dropping some TA, tweets of the week, dates for your diary, and much more besides. This is the Coin Bureau News, live. Yes, hello everyone. This is indeed the Coin Bureau News live. Great to see you all. Thank you for joining. And Nick, how are you, sir?
I'm very well, thanks, Guy. It's looking slightly optimistic today.
Yes, it must have noticed that you have the green light on in the background today. Markets are
harbinger of things to come. My green lights and in the background.
Okay, that's really what people are tuning in for, to see what color lights you've got on.
Yeah, the soothsayer, the directional markets.
I apologize to all of those in the comments, all of those viewers who were hoping that I was going to be wearing something more interesting. I've seen a hot pink jumpsuit floated. It's in the wash. What can I say? I wore it quite a lot over the weekend. It got a bit dirty. It's in the wash. It hasn't dried in time. I apologize. Let's move on.
Where were you wearing a hot pink jumpsuit on the weekend, Guy?
I couldn't possibly say. That is information I am unwilling to divulge for obvious reasons. Today we are going to be talking about what's been going on in crypto and other markets over the last week. It's fair to say that last week was pretty eventful, and I think this coming week could be pretty eventful as well. So we're going to give you a preview of some of the things coming up. And then we're going to dig into one of the big stories from last week, which was Kevin Warsh's first FOMC meeting. It was all a bit of a change, really. The days of Jerome Powell and his sort of gruff good afternoon are no more. And instead, we have young Mr. Warsh at the helm. And it looks like we're going to get very different messages from the Fed. So we'll be digging into that as well. Matt is going to be bringing us some wonderful Australian TA. We'll have tweets of the week, all the other stuff that you know and love. But with that in mind, before we kick off, as you'll see, there is a progress button below me. It's currently at 0%. If we can get that up to 20%, then maybe the hot pink jumpsuit will be ready, will be clean and dry in time for next week.
You gotta want to see that, man. Come on, hit up those likes. Let's see if we can do it. Let's make Guy commit to that.
Absolutely.
Let's go. Come on, guys. Right.
All right.
So the week last week.
Should we kick off then?
Yeah, we should. Let's do that. So it started off last week, Monday, with some good news that broke from Mr. Trump, Donald Trump himself. This was the news that a deal had finally been completed and agreed. Indeed, there was a lot of confusion as to whether this 39th announcement of a concluded deal was in fact correct, but it turned out to be so, and Bitcoin duly took its cue from that as it broke through 67K.
There we are. Yes, let the oil flow, he said. Meanwhile, SpaceX was the big kind of story in markets. That was continue rallying. That went on quite a pump. Remember, the IPO price was $135. So there was a lot of early froth around that launch.
It was, yeah, and it wasn't just SpaceX. We also had stocks. They were rallying bigly on the news of the deal that was announced.
Yeah. Then Tuesday, we came back down to earth a bit. I'm liking the way we're getting a lot of sort of puns on the SpaceX launch in. Expect more of those later in the stream. Yes, on Tuesday, we came down to earth a bit with the Bank of Japan hiking rates, although this was to be expected. We'd been talking about this for a while. But yes, so Japanese interest rates are now at their highest level in 30 years.
Yeah, no, crazy. And then SpaceX just kept on rocketing up, and it's not. its market cap is now bigger than the Russian economy. Take that.
That is just mental, isn't it? I mean, I know Russia's economy is well behind its size as a country, in terms of land area. But that is bonkers, isn't it? The largest country in the world by quite a distance, and SpaceX is larger than its economy. That is mind blowing. No wonder Putin looks underwhelmed.
Yeah, no doubt. Wednesday was a very, very big day. This is the one which we will be talking about a bit more, but to give you a bit of context before that, this was the FOMC day, and rates were left unchanged, much as expected. 9 out of 18 officials expect a 2026 rate hike.
Mm-hmm. GDP forecast, meanwhile, was cut from 2.4% to 2.2%.
Yeah, and crucially, the most important thing to come out of it, I think, is the fact that there will be no more forward guidance, which is really interesting. And we'll come back to this in our second section, talking more about what this meant for the Fed, the markets, and the economy. But markets did not like the fact that they were not getting any sort of forward guidance or any sort of tidbits or Fed speak that they could pass, so they collapsed on the day.
Yeah, which took us to Thursday, and we had some good news around the war with Iran. The MoU, the Memorandum of Understanding, was signed not in Switzerland, but actually in Versailles.
I don't think there's been anything really that significant of any description of the signed in Versailles in the past century, right, Guy? Nothing really. No historical significance to that, is there?
As far as I know, any treaty that might have been signed in Versailles previously has been a great success, and has heralded nothing but good. As far as I know. But then my grasp on history is about as good as those in the White House. Nevertheless, the document was signed a bit ahead of time. It was supposed to be signed on Friday, but they signed it, I guess, because there was a G7 meeting in France, wasn't there?
Yeah, there was, exactly. That's what they were doing there, and I think it was very impromptu. It surprised a lot of people, actually, supposedly. So. Yeah, which means one can only assume, given the fact that no one actually interjected, being like, "Well, wait a second, why are you signing this in Versailles?" I think that Trump basically decided, I'm here with all the other world leaders. I want to go and get a few applauses, so let me sign it right now.
Yeah, let's bring an end to the war that I started. But obviously, as a result of that, the Strait of Hormuz was opened, and according to Trump's demand, the oil did indeed start flowing.
It is, and it has continued since, even into today. There's been a lot of flow going through. Moving over from the oil markets into crypto, an interesting development for strategy. When we talked about this a week or two ago, but Strategy's perpetual preferred instrument, Stretch, or STRC, continued falling, and it actually fell to as low as below, I think, even below this tweet, where it was about $83, which is crazy for something that should be trading towards par. And we've covered this in extensive detail over in the Coin Bureau Club, by the way, guys. And if you're not members, you can sign up and scan right there. We've not only covered Strategy, and of course, we've covered many other crypto projects and macro news and developments and stocks and TradFi as well. Some hot penny stock picks as well. So be sure to subscribe if you're not subscribed already over on the Coin Bureau Club.
Yeah, absolutely. And as we said there, the Strategy, I think personally, is the big overhang for Bitcoin at the moment, because they have to meet this dividend on Stretch, and if they can't, the theory is that the story goes that they may eventually have to sell more Bitcoin in order to cover it, which could of course tank the price still further, which would be bad for Stretch, etc., etc. So the market does not like this, and I think that has very much been reflected in Bitcoin's rather lackluster price action.
Exactly. Then on Friday, some slightly good news for crypto. There's been an 11th hour push for Clarity Act. The long-suffering Clarity Act headlines, they keep on coming. I'm beginning to think that eventually they're going to start petering out when we get past the July headline, and people are going to realize actually the chances of this thing passing are diminishing by the day.
Yeah. Yeah. Meanwhile, there are also concerns around the possibility of forced selling hitting the market. $165 billion in forced selling to hit the market by the end of this month.
Yeah, this is according to JP Morgan around these quarterly index, these quarterly fund adjustments, right? So they basically, they sell and when they're making their quarterly records, and essentially they're rebalancing in their portfolios. And as a result, this is because of the rally in the equity markets. This is one of the biggest rebalancing ever in terms of volume. So keep an eye on that. It could start on Friday. So yeah, that's a warning coming from Wall Street.
Yeah. Then there was more Iran. This takes us to the sort of weekend to Monday. There was more drama around Iran. Israel and Hezbollah also agreed to a ceasefire. Israel, the situation there was sort of a bit of a fly in the ointment as far as the ceasefire was concerned. So that was definitely good news that they agreed a ceasefire. And yeah, but as soon as almost as soon as it appeared, it was gone again.
Yeah, exactly. And it's gone. The most predictable thing happened. Yeah, so basically the fighting flared up again over there in Lebanon. And Iran, of course, responded, said they're going to close the strait. Of course. But talks did seem to be on track, though, over in Switzerland. They did take place. And they have yielded positive results.
Yeah. So it does seem like it has been a success. Made a lot of good progress. Strait is open, which is obviously what everyone wants. But obviously there's still a lot more negotiation to be done in this 60-day window, which has been opened up by the signing of the ceasefire.
Yeah, exactly. And then over in the old country, biggest news of the day was that the prime minister, the sixth prime minister in 10 years, has fallen on his sword and is now leaving the post. What do you think about this guy?
Well, we like to keep freshening things up. We like to mix it up a bit over in the UK now. We can't have someone in office for too long, so it's good to sort of move them on as soon as possible. But yeah, as you say, this is I've lost count now. We've had what people have compared us to Italy a lot of the time, in that we've sort of cycled through one prime minister after another. But of course, the irony is that Italy now, since Meloni got into power, is actually a beacon of stability.
Yes.
So we basically
they're going to start using the UK as an example of a dysfunctional democracy in Europe now.
Exactly. We've taken Italy's place as the sort of economic and political laughingstock of Europe.
Well, at least Starmer lasted longer than a head of lettuce, and his finance minister, treasurer, didn't completely tank the gilt markets. So, it's progress. It's progress.
Yeah. At least he's not sort of leaving with the economy absolutely in flames behind him. I mean, it's not exactly doing great, but there have definitely been more dramatic exits. But so we got another prime minister to look forward to try and figure all that out. Okay, let's talk about something more cheerful, and that's what we can look forward to this week.
Yeah, so more of the Iran-US talks. They look to be yielding results. We've got PCE coming up, which is very important in terms of, especially given the context with the meeting we just had last week. There's GDP numbers as well, and much more. And of course, watch the BOJ, because the yen is at close to breaking through a 40-year high, 40-year low to the US dollar. And we'll be talking about that in a bit. But quickly, just looking at two charts on the Bitcoin. Firstly, on the weekly, it's looking pretty good here, in the sense that we managed to still hold above the 200-week simple moving average. We closed above it yesterday as well. Question is whether we can reclaim the 200-week exponential moving average. We need to get some momentum going into that. But the fact that we still holding above the trend on the 200-week simple moving average is a good sign, because that has previously always been a support for any sort of bear market low. However, on the daily, we do see potential ominous signs of, this is what's termed a bear flag or bear pennant, a breakdown where you see this kind of formation. So, if we break below this, the lower end of that bear pennant over there, that's generally how bear flags play out, or bear pennants play out. So keep an eye on where Bitcoin closes in the next few days. Although there is some hopium now with the Iran deal, so hopefully the formation doesn't play out, but do keep an eye on that. And if we do break below, then the potential level to look at could be about 57K, which is at the 68% golden ratio that was in the previous weekly chart. But if you guys are looking to trade Bitcoin right now, we couldn't think of a better place to do it than on our first brand partner, which is Bitcoin. BitGet. I'm confused here. Our brand partner, BitGet. Bitcoin basically sponsored the stream, guys. Yeah. So, but you can go over and trade on BitGet, and especially with BitGet TradFi. And I don't know if you've got the promo stuff in here yet, or where's the...
Right. If you're looking to trade these latest market moves, whether that's crypto or traditional assets like gold and commodities, then BitGet is definitely worth a look. They've just rolled out their TradFi trading platform, which lets you trade assets like gold and other commodities directly using USDT, so you don't need to jump between platforms. You also get deep liquidity, low slippage, and access to up to 500x leverage. Now, if you sign up using the QR code on screen or the link in the description, you can get up to $50,000 in bonuses. And on top of that, if you complete your first net deposit of $5,000 and place your first trade, you'll unlock a VIP 3 trial. Now that includes up to 38% fee discounts, exclusive VIP perks, and free token airdrops. So scan the QR code, check the link below, and see what BitGet has to offer.
Thanks to Bitcoin for sponsoring the stream. What's the comments looking like, Guy? What's the sentiment like? Let's see here.
Okay. Yes, Mr. Robot is partnered with Bitcoin too for his retirement. Very, very wise. Very
reliable financial advisor, Bitcoin.
Absolutely. Absolutely. What else do we have in the comments? This is odd because when I was at this jelly wrestling party, I was pretty sure that I spotted a dodgy-looking Australian lurking in the corner. So that must have been Brett. Brett, why didn't you come and say hi?
Guy, how did you know it was Brett? Because generally at furry parties, you've got something over your face, right?
You obviously haven't been to enough of these jelly wrestling parties, Dick. You need to check them out. Meanwhile, a good question from Liz here. SpaceX gapping down this morning. Odds on how soon it will be at or below 135. That's a good question because I think it can definitely. I'm kind of expecting it to dip below that level as the euphoria runs out. I mean, I think long term. It'll probably it could well go much higher, but I think it could well dip down to that IPO price.
Well, not yet because we still have the index passive, the index buy, index rebalancing, and then the subsequent passive buying and bidding for the passive funds, right, in the institutions. So I don't think it's going to fall below 135. In the next few weeks, maybe later or after the passive buying has stopped and after the unlocks start in 6 months' time.
Yes, unlocks, as anyone who's been in crypto for a while will be familiar with. Okay, and Juicy Waffles is asking, have you guys seen all the videos of Europeans coming over to Texas for the World Cup and loving the USA, its food and shopping experiences? I can't tell whether this is supposed to be genuine or sarcastic. What I do love is the fact that apparently Scotland fans managed to drink Boston dry.
What? Really? Sorry, dry?
Yeah.
What do you...
As in, like, pubs in Boston were running out of beer because Scotland fans were drinking so much, and I think England fans acquitted themselves fairly well on that front in Dallas as well. Yeah, I'm pleased to see Europeans coming across, getting stuck in.
Keeping up with traditions, man. Keeping up with traditions. Oh, crazy.
Yeah.
Speaking about traditions, last week was the FOMC meeting, and it was Warsh's first FOMC meeting. And I'm sorry, guy, but I was slightly underwhelmed. I do miss our old friend, Mr. J. Powell. It's a long time till we see him again. Hey.
We didn't make the most of him. We didn't appreciate him enough when he was there, and now he's gone, and we just have to live with that.
Yeah. Warsh was underwhelming. I think that's because firstly, there was actually a bet on Polymarket that was someone had placed a large bet on that Warsh would start the conference with saying the famous Powell's good morning, but I think he said good day. So that was also then a bit of a shock already. We knew it wasn't going to get off to the usual start. But jumping into the decision itself, they held rates at 3.5 to 3.75%, which was no surprise.
Yeah. The statement, though, was much shorter. Warsh basically delivered on his promise. He wants a Fed that talks less. So we got that. It was markedly shorter than what Jerome Powell used to give.
Yeah, for sure. And importantly, the easing bias was removed. So there's no more hint at any sort of rate cuts coming. So it's therefore hikes are more likely. Okay.
And yes, he also announced that 5 task forces had launched, and this was a bit of this seems to be a new sort of diversion tactic that he has, isn't it? It's when people ask a question, he was sort of going, "Well, there's a task force for that. We'll put the task force on it." So yeah, someone's got the joy of sitting on those task forces.
Yeah, they got new job opportunities are going around at the Fed. Now, when it comes to dot plot itself, what was really interesting was that there were only 18 dots from the 19 policymakers, and that's because Warsh himself decided to abstain from putting down a dot plot.
Yeah, which was a dot on the plot. And it was interesting because I was looking at this, the breakdown of that dot plot. There was one governor was sort of signaling a cut. 8 were for hold, 3 were for 1 hike, 5 were for 2 hikes, and someone who just presumably wants to just go sit back and watch the world burn was calling for 3 hikes by the end of the year.
I wonder who that governor was. 3, yeah. I wonder who that was. I'd love to. I should actually have checked him before the stream because that's crazy.
Yeah.
I mean, I know we worried about inflation, but bro, seriously, are you trying to destroy the economy? Don't you know the US government has trillions of dollars in debt? I mean, come on, man. Anyway, the median of the dot plot ends 2026 at 3.8%, which is up from the 3.4% that they previously had projected in March. So the one rate hike is baked in.
Yeah. And Warsh sort of left us with the comment. He said, quote, "I've refrained from offering any projections. The good news is we'll meet in 6 weeks."
It's great. Something to look forward to. Yeah. Now, basically, when it comes to Warsh and how he handled the press conference himself, every hard question went unanswered. With the quote, as you mentioned, "We have a task force for that."
Mm-hmm. Yes, basically, he sort of pledged to unambiguously and unanimously deliver price stability. This was something that he was very big on, price stability.
Yeah, and he would not say if that meant rate hikes were coming. And he also declined to explain even the committee's reasoning or any sort of framework for that reasoning, which is what some market participants were quite irked by, because it's one thing to not give any guidance as to what you're going to do, but also not to explain the framework with which you want to think you're thinking about monetary policy. That is very much of a black box.
Yeah. Never complain, never explain. It seems to be the new Fed regime. So the way the markets reacted to this, the DXY, the dollar, was up 0.8% on Wednesday. That extended out into Thursday as well. So the dollar strengthened on the news. Bitcoin, however, sold off. So the term of deliver price stability was read as definitely hawkish.
Yeah, and what happened on the yield curve was really interesting because we had a bear flattening. Essentially, what happened was the 2-year Treasury yield rallied, and the gap and the spread between the 10-year and the 2-year had fell to 28 basis points, which is the tightest since April 2025. And this is basically the rates market saying we're expecting higher interest rates for longer, and the short end is picking up. So what the markets are expecting is tighter monetary policy for the next 2 years. So this is what the markets are already pricing in, that hawkish pivot.
Yeah. So really kind of looking at the bigger picture from all of this, I mean, as Kevin Warsh did come into this job sort of talking about regime change, and we very much got that. The forward guidance is gone. And so now every 6-week meeting is going to be much more of a blank slate. I guess that the markets are going to be guessing on it, really.
Yeah, it's going to be a lot of volatility, especially in the rates market. So in sum, then the committee was hawkish, but Warsh himself was personally uncommitted. It's kind of like this strategic ambiguity in terms of messaging over there.
Yeah. To be fair to Warsh, he's got a very difficult job to do, hasn't he? I mean, obviously, so did Jerome Powell, and I guess it's never easy for a new chair to come into. It's a hard job, and it's a hard job to take over. And of course, Warsh will be under quite a lot of pressure from the man who appointed him. You know, Donald Trump has said that he wants rates down. And obviously, as the midterms get ever closer in November, you would imagine that the pressure from the White House to drop rates will only intensify. So, I mean, I guess Warsh is sort of trying, in a sense, to insulate himself from all of that.
Those Truth Social posts are going to become ever more frenetic as we approach election day. That's for sure. So it's going to be a difficult line to tread for Mr. Warsh, but we wish him well.
Absolutely. Good luck. You are going to need it. Okay, it is that point in the stream where we need to get one of our gigabrained charters on board on the stream to talk us through what they're seeing in the charts. And this week, we are very lucky to be joined once again by our Aussie correspondent, Matt. So, Matt, it's over to you, sir.
Matt with the charts, red or green, calling the moves before they're seen.
What's up, Coin Bureau fam? Here's today's Bitcoin update. So at the moment, Bitcoin is trapped between $62,500 to about $66,000. Now, this can be seen on the weekly time frame as well as daily time frame. But what I want to focus on is where we are at the moment. And the reason I'm focused on that is I do have a longer term target of around $52,000 to $54,000 on Bitcoin. And you can see that because look at the left of the chart here. You can see how easily price does fluctuate within this range once it does get trapped. And what we're seeing at the moment is Bitcoin is actually struggling to break above this $66,000 mark. And that's where we're seeing candles get bounced off on the smaller time frame. So you can see here, we'll drop down to the to the daily time frame, and then we'll drop into the 4-hour. But if you look left on this chart, we can remove the trend line just to make it a little bit easier for everyone to see. But look to the left, once price can actually get above 66,000 and hold with some conviction, it does open up the gap for Bitcoin to push back towards the $70,000 mark. As it stands at the moment though, we haven't had that. We've had no conviction. We've had no real big push to the upside, and then no significant retest where price is actually holding. Now, take into consideration as well from a weekly standpoint, price is still in a significant downtrend. It's quite obvious when you zoom out on the market. Price has not broken out in any fashion whatsoever yet, but people are still trying to pick the bottom. Now, the only early signal I can see at the moment on Bitcoin realistically is the CCI is starting to put in a triple bullish divergence. That is on the weekly time frame. So take note of that. We do know that we've got some positive news coming out with the peace negotiations as well with Iran and the US. That will help the market to a degree. And we have seen oil prices drop off this morning by about 2%. Again, that is good for risk assets. But I do take everything that happens on a Monday with a grain of salt, because as we sort of say it, fake move Mondays do occur, and it sort of derails the back end of the week, and things do change very, very early on. So keep note of this. If I was someone that's trading this week, obviously, which I am, I'm watching to see how Bitcoin reacts at this point here. If we can get back above the $66,000 mark, then it will open up the gap to around 70,000. But take note, on the smaller time frame of the 4 hour, there is now a large order zone created at between 66 and 67,000, which means price is likely going to reject at that point, despite even if price does move up from where it is currently. So that is from there where we are now. Grab my ruler tool. From where we are now all the way up, it's about a 3.5% move. That's good for Bitcoin, good trading opportunities in that respect if you are trading. But from a longer term standpoint, I'm not getting excited that, the news is starting to wear off and, we're starting to get the peace talks and so forth. I am still conscious that we are very much still in a bear market. So any short-term pumps, I'll be looking to take profits. But as it stands at the moment, key levels, watch for breaks about 66,000. Now we've got to watch for breaks above 67. If that happens, then it does open up the gap to around the $70,000 to $71,000 mark in the short term. But from a weekly standpoint, just be mindful when you do zoom out on the chart, you can see that price is currently trapped below the 65.5 to 66K mark and does need a breakout retest on the larger time frames to really give it some conviction. And take note, we do have the EMAs, so the 200 and the 50 EMA are closing down on Bitcoin, which is never a great sign. But also take note that this level here on Bitcoin, on the 200 EMA, will act as a significant level of resistance, which price will need to bounce above. So despite any pumps we do get, be cautious. There is a lot of resistance mounted above. Once we break out above 71,000, then it's a different story. You can see when we've done that historically, it does open up some large percentage moves. I'll be watching for that. But as it stands, I'm very cautious of the market. I'll take small trading opportunities as they do arise and take note of that 66 to 67K mark. That is a significant level to break, hold above with some conviction, and then that will open up the gap for a larger move. So catch you on Coin Bureau Trading for the next market update. See ya.
Well, cheers. Thanks, Matt. So keep an eye on that 66 to 67K level. And in the short term, potentially any profit taking opportunities there. But we do need to flip that 200-week exponential moving average on the weekly. But if you guys want to catch Matt's trades regularly, then he does stream on Coin Bureau Trading channel. And it's every Monday and every Thursday, I believe. So you can go over and subscribe to the Coin Bureau Trading channel right now. We'll leave links in the description, and go and watch Matt as well as Geordie and Aaron, all of our cohort of trading hosts. We'll pull the QR code up there right now. Guys, go and follow Coin Bureau Trading.
Absolutely. Okay, it is now that point in the stream where we have a look at some of the tweets of the week. So let's go. All right. Now we start. This is a collection of tweets. Can you explain what we're looking at here, Nick?
They're all in relation to the great Iran deal, the biggest taco of them all. I think most of the analysis that has been done objectively is that the US has come out of this worse than they went in, and Iran has actually come out on top. And it was just quite a collection of tweets. I mean, the first one, it's hilarious. Trump at the beginning of the war, Trump at the end of the war. He's done a conversion from Judaism to Islam. Al-Khamenei basically, or the late Al-Khamenei saying, this is in January, we will bring the enemy to its knees. You got was the Pete Hegseth one. I think that one was also pretty good. What was that?
I think that one's my personal favorite. What's that? Renames the Department of War, fights one war, loses.
Yeah, renames the Department of War, names himself the Secretary of War, fights one war, loses. We then also
Fought
had
one,
the
lost one.
and then the final one. I think this is from the Department of War CTO. I don't know what account that is. What is this? Is the Department of War official account for the Office of the Undersecretary, and they basically got this image of give them nightmares, and then the Twitterati decided to give them a community post, which was that they gave the enemy $300 billion instead.
Yeah, it's quite extraordinary. Iran has really done a number on them here. It's extraordinary.
Yeah.
Okay, and we also have some other tweets as well, don't we? What have we got next? Oh yes, the other one is strategy.
Yeah, so if you guys didn't see the clip of Saylor, he was on a CoinDesk interview last week, and he actually in that interview explained that he came up with the idea to structure Stretch through a conversation with ChatGPT. So he vibe coded, financially engineered a capital market product that's now got billions in circulation with a LLM and a chatbot. So yeah, that did the rounds on X for sure. And then I did like the other tweet over there, which was essentially Saylor saying to ChatGPT, ChatGPT, help me repeg Stretch. Make no mistakes.
Oh yeah, good catch. Well noticed. I dropped the ball on that one.
You're right to push back. I completely messed up. I'm sorry.
Yeah, an extraordinary decision to, as you say, to design a financial, a massive public markets financial product with ChatGPT. Perhaps an even more extraordinary thing to then admit that you'd use ChatGPT to design.
Must have been a Freudian slip. To be fair to him, he said he was going back and forward with it in terms of discussing with it. But noob mistake, man. He should have used Claude.
Yeah, or as Brett says, maybe DeepSeek. Maybe the Chinese would have been able to give him some better ideas. Yeah, just extraordinary. So those are the tweets, nicely subdivided into two categories there. Okay, now this week there is a lot coming down the pipeline in terms of data, isn't there?
Yeah, so on Tuesday, we've got the US consumer confidence reading for June. The previous was at 92.8, so that was a record low sentiment backdrop. So it's a 3-year low going into this reading, but we've got gas prices falling because of the oil prices coming down as well because of what's going on with Iran. So does confidence recover? We'll have to see.
Yeah. Then on Wednesday, it is the start of a big run of data. Q1 2026 GDP, the second estimate for that is due. And the second estimate showing 1.6 annualized growth. The first estimate was 0.5%. So a big revision upwards.
Yep. And then on Thursday, it's the big one. This is the PCE or release, the Fed's preferred inflation gauge. The headline PCE is consensus about 3.7% year on year, which versus 3.5% in April, with core consensus at about 3.3% versus 3.2% in April. Yeah. If we get a hot print, which is above 3.8%, then this locks in the rate hike in September. And the dollar will surge, risk assets are likely to fall, including crypto. However, if we do have a cool print, which is below 3.5%, then markets will breathe, there'll be a relief rally, and the Fed has more room to wait.
Yeah. And the PCE actually feeds directly into Bank of Japan carry trade dynamics as well, because a hot PCE in the US, as you say, stronger dollar, also weaker yen, and therefore more risk of that carry trade unwinding. And basically a carry trade unwind means that all those risk assets, like for instance crypto, but also many stocks as well, that were bought using borrowed yen, will be sold in order to pay back those yen loans that are now more expensive.
Yeah, exactly. It's all global. Whatever the bank and right now the yen is near record lows, so the Bank of Japan has to come back and actually start hiking, because if they don't hike in as quickly as the Fed does, then the differential becomes even larger. So the Bank of Japan can't be caught playing catch up. And then on Friday, we've got, as we mentioned earlier on the stream, there's that month-end portfolio rebalancing. So you've got these institutional funds which will rebalance at the end of the quarter, and this could start at the end of the week. So keep an eye on it potentially.
Yeah. Okay, so before we go, we've just got some time to look at what people have been saying in the comments. We didn't really mention this, but Thibaut has reminded us Michael Saylor brought 520 BTC, by the way. Strategy is back to buying.
At least he's buying something, man. At least he's trying.
Yeah, I mean, okay. Brett again pointing out Iran and its meme tweets have been outstanding, just epic. They really have owned the meme game on Twitter.
Oh man, yeah, they've memed their way to the top of that pile, honestly, with the Lego memes and everything.
Yeah,
they have won the meme game.
I'm not going to say it's made me have a bit more respect for a horrible theocratic regime, but nevertheless, you've still got to. I'm still kind of impressed by what they've achieved on that front. Dirty Dan 764, I think, speaks for a lot of us when he says this cycle might make me a BTC maxi. I mean, given what's happening with strategy in BTC at the moment, I think maybe even that's in question.
Yeah, that's crazy, man. But to be fair, that's not a Bitcoin problem. I mean, that's basically what I would like to know is, given that Saylor is known as a Bitcoin maxi, he's been talking about Bitcoin maximism. He famously says there is no second best, and he casts aspersions at all other forms of cryptocurrency. Why is it that he's out there selling an equity product that's basically just a derivative of Bitcoin and these sort of digital credits? Like, I think this is the thing. It's kind of like practice what you preach. It's just, and I don't know who's buying these instruments, honestly.
I mean, wasn't it at the beginning? Wasn't it just buy Bitcoin, hold Bitcoin?
Yeah, never sell your Bitcoin. Never sell your Bitcoin.
That seemed fine. That seemed fine to me. But
sell your kidney for a Bitcoin. Go and take out a mortgage on your house for a Bitcoin. But now it's basically actually just don't be a net seller of Bitcoin. And I never said don't sell. I never said I'm not going to sell my Bitcoin. I said never sell your Bitcoin.
Yeah. Infinite money glitch, as has been mentioned a few times. It's like, yes, I imagine that this time, yes, they will get that one. They will get that one right. Okay, that is about all we've got time for this week, folks. But as ever, keep your eyes peeled for all our other channels. We've got lots more content coming your way as ever. Nick and I will be back same time, same place. As we say, from all that data that's coming this week, and plus all the crazy stuff going on in the world, this week is likely to be another eventful one. So let's see where we are 1 week from now.
Yep. See you guys then.
All right.
Guy
Thanks,
and
everyone.
Nick never fail us. Every week Nick brings the news and Guy is just out of bed. Guy is manifesting orange. Burnt BTC orange. Love from Boracay. This chair turtle. Crystal ball. This chair turtle.